Hello everyone, welcome to the podcast by Uprime. These are podcasts that will be in the public domain. So what do we have? Startups will move from premium models to cash flow positive models. So again, you don't want an investor money, so that founders of the company will have significant stake in the company for a long period of time, as opposed to the status right now wherein founders literally have less than 1%. They're not in it for the long run. They just want to raise money, get to a point where the company can be floated as a public company, and they kind of cash out, which won't be the case if you can give them incentives to be cash flow positive from the very beginning. I mean, when I say very beginning, I would say the first 3 years. So they will be decreasing the lock-in periods of investment. So if someone were to invest in startups, the startup valuation is sometimes irrational. That irrationality is purely driven by future earnings. So if you have one-to-one correspondence with the amount of money you make, and if the amount of money you make is very near to the product launch, you'll be in a much better position, because people are willing to pay, because they get when they file tax returns, they get tax credits. So you'll have more disclosure requirements from 32 million people who are paying taxes. At the same time, companies are willing to avoid premium model altogether. So the second point is the government will be a bigger player. I want a big government always, because like if you have a bigger government which has higher revenues, let's say there is a war tomorrow, there is no money to finance the war. You have to take loans from other countries. You don't want such a thing. So I want India to be I'm always long India, meaning anything that's good for India is good for the companies that work in India. So if you want to have a stronger country, that would mean the revenue flows of that country have to be significantly higher. So this is a way by which you can expand the number of people who are taxed, and you hope that the short-term decrease in the revenues to the coffers of the government will in the long run be recouped by the number of people who end up paying taxes. Right. Point is not even a benefit. So I just at the end give revenues of all startups about 23,493 crores, and the loss is about 15,672 crores. So this combined is all the money that's spent in the new economy, this considering only big companies and startups which are very famous. So there are about 50 of them that we can take count at. So this turns out to be around 6 billion money spent, which is very tiny compared to 2.25 trillion economy, which serves 1.25 people. So India will grow. This pie will become bigger. Right. As a result of this pie becoming bigger, productivity curve will go higher and efficiency will be increased.
Where do you get this number, the 6 billion?
6 billion is the sum total of all the 50 big startups, right, startup revenue, and the losses they made that year. So I'm talking about the amount of money that has been spent by these 50 or 60 odd companies, which are very famous or notorious, let's put it that way. So the sum total of all the revenues of all 60 companies and the losses made by all these 60 companies combined is about 6 billion. Very tiny amount compared to 2.25 trillion. So that's pretty much the policy. Now I hope that the whole article is received positively by people who are in the position of making policy for the country, because this has literally no downside apart from the fact that you will have a short-term decrease in revenue count. Thanks everyone for joining us. It was an extensive discussion. Hope you join us next time for our future podcast.